Now, I didn't start with fancy software. I started as a sole proprietor, which just means I was running my business under my own name and my own social security number with no legal separation between entity and myself. And a quick note on that, if you're at this stage, if you want to operate under a name other than your own legal name, you need to register a DBA name with your state of residence or with the state where your business is actually performing. That's a simple, cheap step, and skipping it is one of the most common mistakes that I see with sole proprietors. So make sure if you are operating as a sole proprietor, go out and get that DBA name. It's really inexpensive and it might save you from a liability and legal standpoint. As the business grew, I formed an LLC. So I started out as a sole proprietorship, then went to an LLC. Now, here's something a lot of people don't realize. An LLC isn't actually a tax classification by itself. It's a legal structure. And the IRS lets you choose how it gets taxed. By default, mine was taxed as what is called a disregarded entity, which is the same way a sole proprietorship's tax, where everything shows up on Schedule C on your individual 1040 on your tax return. Later on, after forming my LLC, I made a retroactive election for that LLC to be taxed as an S corporation. And that's a whole nother video worth of content right there. The S corporation makes sense at a certain level because you can save a little bit on self-employment taxes. There are some increased costs associated with making an S corp election, so just keep that in mind. It is not for everybody, but it might be something feasible down the road. An LLC can be taxed as a partnership, it can be taxed as a C corporation, or it can stay as a disregarded entity. Oftentimes, the S corp sounds good because of the potential to save self-employment taxes, but at the end of the day, having it be taxed as a Schedule C business might make the most sense, and it is also a little bit simpler to implement. So keep those in mind. Please weigh the pros and cons. Do your own due diligence and research. You feel free to plug it into Claude or ChatGPT and see what it can tell you, because it can give you a pretty in-depth analysis of what the pros and cons are and go from there. Because with the S Corp, one reason why you might not want to make the S Corp election is once you make that S Corp election, you're required to run payroll for yourself. And that changes pretty much everything about how your accounting software is handling the finances, the bookkeeping around that. And then you have payroll as well, which payroll is its own beast in and of itself. So either way, I'm not discouraging you one way or another. Every situation is going to be very different. For some people, it might make sense to stay a disregarded entity and have all of their business activities show up on Schedule C on their 1040. For others, it will make sense to maybe make the S Corp election and have the 1120S filed separately, which is the S Corp tax return. And then you also have to take that. You have a K1 generated, which is basically your distributive share of income, a summary of that. You'll have a K1 generated, and that will go on your individual 1040, basically telling you what income from the S corporation you're supposed to recognize on your individual return. So a little bit of complexity when it comes to S corporations because you have a separate tax return, but it's nothing too substantial. And if you're not comfortable preparing a return like that yourself, usually a Schedule C return is fairly doable by yourself. I'd say it's a little bit harder to do an S Corp return. So it may be required at that point to bring on like an accounting professional. But just keep in mind that a Schedule C business, you could probably even TurboTax it and you'd be okay as long as your record keeping is sufficient. With an S corporation, it's a little more extensive, a little more involved. It would be harder to DIY an S corporation return. It's possible. If you're ambitious and you want to save on tax preparation, you could probably do it. But I'm just warning you, it's going to be a little more complex than the simple Schedule C form on your 1040. Just keep that in mind, some of the pros and cons of an S Corp versus a disregarded entity when it comes to LLCs. Now, so let's get into the actual software. The two platforms I hear most about, and the two I'm comparing today, are QuickBooks Online and Xero. QuickBooks Online currently runs 5 tiers. We have Solopreneur, which is $20 a month, Simple Start at $38 a month, Essentials at $85 a month, and Plus at $140 a month, and Advanced at $340 a month. Advanced recently got a lot more valuable, according to QuickBooks. It now bundles in the top payroll tier and the top bill pay tier, which some people might find useful. Again, it's not something I've really had much experience with. Xero, on the other hand, runs 3 tiers here in the US, early at $25 a month, growing at $55 a month, and established at $90 a month. In my opinion, Xero has a little simpler naming structure. I like that. We have early, growing, and established. That's really straightforward. Early caps how many invoices and bills you can send each month. Growing removes those caps, and established adds multi-currency, which matters if you're dealing with international customers or vendors. So fairly straightforward with Xero. Now, payroll is where these two platforms really diverge. They both serve as a solid ledger software to keep track of your bank feed, all the expenses and all the income coming in and out of your bank account. Xero and QuickBooks will both do a good job at tracking those. Now, with the payroll, Core for QuickBooks runs $50 a month plus $6 per employee and covers full payroll processing and tax filing, which is extremely helpful. Early on in my accounting running career, I tried to file reports manually. I'm like, oh, I'll save that $50 a month and file all the payroll tax reports myself because I don't need to pay Intuit more money. And long story short, doing that, I was very open to paying a payroll provider to do all of that for me, because if you've ever had to file manual payroll tax reports, it's something you have to be very much organized. You have to set reminders and you have to make sure those reports get filed on time. I found that paying $50 a month was well worth it because running payroll reports can be a pain. Now, if you are just a Schedule C business and you are the only employee of the business, you actually don't have to run payroll reports. So there's one huge advantage of the disregarded entity or the sole proprietorship over the S Corp election is you don't have payroll, and payroll can be a headache in and of itself. So just keep that in mind when you're deciphering whether or not you should make the S Corp election, stay a sole proprietorship, maybe bring in a partner. There's a lot of ways to slice it. I almost exclusively use Payroll Core through QuickBooks. Payroll Core I found gets pretty much most every job done. Like, yeah, I have yet to find a situation for like small businesses where Core isn't enough. And so keep that in mind when you maybe fall the temptation to elect for the higher service tiers for payroll. Really consider what the baseline requirements are for payroll filings and make your determination based on what those core requirements are. Because a lot of times I found that Core is the best option there. And premium runs $85 a month plus $9 per employee. So it's significantly more expensive than Core. Basically, what it adds is time tracking and HR support. Now, if you're in a business where time tracking is critical, I could understand it, but I found that there are third-party time tracking apps that are a lot better than what QuickBooks offers. So that's just one consideration. The HR support, I don't know how big you're getting, is something that will add a lot of value and it's something that you really need. But in my opinion, the HR support was fairly limited and I didn't feel like it added much value, if any. So just consider that in making your decision. Last, we have Elite, which runs $130 a month plus $11 per employee and adds more personalized setup along with tax penalty protection. So like QuickBooks, if for some reason you're depending on QuickBooks to file a report and for whatever reason it's late or it doesn't get filed, QuickBooks will basically cover any penalties that accrue from that. And so it's insurance in a way to cover your activity around payroll. That's fairly valuable, but it seems like you're paying a very steep price for that kind of insurance. And as long as your payroll is fairly simple and your reports are being filed in a timely manner, which I found that Core does a pretty good job at doing that, there should be no issues with penalties unless you have like state and local reports that are handled outside of QuickBooks and it is essentially your fault that they're not filed. Then I don't even know if QuickBooks would, that might not even fall under the tax penalty protection on the Elite plan. So just my quick analysis and opinion on QuickBooks payroll plans. I would just stick with the Core plan. I would not bother with the Elite plan or the premium plan, but that's my personal opinion. And in my own experience, professional opinion, dealing with other businesses that choose payroll software, I find that the Core does pretty much everything that you need it to do. And so that is my in-depth analysis of what QuickBooks currently has to offer. Do with that what you will. As far as Xero doesn't actually have its own built-in payroll engine the same way QuickBooks does. So instead, you connect like a third-party provider. Like Gusto is one of the most common ones. They're gaining in popularity. They offer a good service. It integrates very cleanly with Xero and QuickBooks. So you can use Gusto with either provider. You're really not going to go wrong with it. Now, if you don't want to use Gusto or you don't want to use QuickBooks, there are other providers like ADP is another one that connects into Xero through its integration marketplace. And it tends to make more sense once you get bigger, you have bigger teams, or you need it like more robust HR features. So the real decision isn't like which accounting software necessarily, it's which accounting software plus which payroll engine. And for an S corp owner, like I described earlier, the payroll piece isn't optional anymore. When you have an S corp, you have to run payroll for yourself. So you have to determine a reasonable salary to pay yourself, and you have to run yourself through. So whether you're choosing ADP, which is a full service done for you option in terms of payroll goes, or you're using QuickBooks or you're using Gusto, if you are an S corporation, you will have to run payroll for yourself through one of those providers, unless you want to file them manually. And I wish you the very best. Maybe you'll do better than I did, but I found that at the end of the day, keeping track of when to file those reports, keeping track of what to write on each of those reports, that was too burdensome or cumbersome to do myself. And so I was happy to pay QuickBooks X amount of dollars a month to do it for me. Like I said, Gusto and QuickBooks Core, in my opinion, are very comparable. So you can use your judgment on whether or not you want to support like Intuit's products or whether you want to go with a third party, something like ADP you might find valuable. So it's really up to you there. Me personally, I like having everything under kind of one ecosystem. Even though I'm not a huge fan of writing massive checks to Intuit, I have found that like Payroll Core through Intuit over the years has gotten better. I know early on I know quite a few accountants who griped about Payroll Core, but it's gotten pretty good. And I've been using it for a number of years now, and I have very little complaints with it. And their customer service is pretty good as well. Just consider that when you're making your decision. Overall, the winner for me at this point is QuickBooks Core, but actually Gusto's been doing some pretty neat things. Now, when it comes to the ledger software, so like the software that allows you to categorize the bank transactions as they come in, whether they're expenses or income, there's one option that most people haven't heard about. And so right now, Intuit is making a push to remove QuickBooks Desktop as an option for accountants. They find that the recurring subscription-based model is advantageous for their business model. And so it is what it is. But what they did, because I think they realized that the pushback with losing out on that Books Desktop, which you basically buy once a year and you can use for an unlimited number of clients. So there was definitely going to be some pushback because those accountants that are using it for a bunch of different businesses could only pay one fee for the year, and then they'd be set for all of those businesses. So when Intuit announced that they're going to be phasing out QuickBooks Desktop, we had a bunch of accountants that were getting substantial value from the pay one time and unlimited accounts type of setup, to where now all these accountants are required to have individual subscriptions for every single client that they had on QuickBooks Desktop. That's the short version of a longer story, but essentially Intuit is phasing it out. And so Intuit decided, I think in a response to the negativity around phasing it out, they released something called QuickBooks Ledger, which is a low-cost QuickBooks product built specifically for accounting professionals. And it's not something you can walk into like QuickBooks and purchase. It's not something that's generally available to the public. So the only way to get it is actually through an accounting firm that already uses QuickBooks Online Accountant. So the accounting firm that has QuickBooks Online Accountant will pay for the software up front, and you can essentially reimburse them for it. Like I have a number of clients that I will pay for QuickBooks Ledger software, and then once a year or twice a year or whatever we decide, they will write me a check or send me funds to cover that QuickBooks subscription. Now, some accounting firms I know will mark up the QuickBooks Ledger and they'll keep the difference because there are some administrative oversight challenges when it comes to paying for and then getting reimbursed by a client. And so consider that there will probably be many accounting firms that will upsell or bump up the price that they would charge for QuickBooks Ledger because they want to keep that little bit of margin to cover their overhead around collecting the reimbursement from you. So consider that, but essentially without any sort of margin for reimbursement, what the firm by itself is paying for the subscription is $10 a month. That's before taxes. So sales tax might increase that a little bit. But if you're doing simple, low complexity bookkeeping and you already work with an accountant who offers this, or you know an accountant that is all right with you utilizing the reimbursement model and just getting paid for helping them get access to the software, then you could approach that accountant friend of yours and run it through their accounting firm. What the accountant pays for that software for QuickBooks Ledger is $10 per month, so $120 a year. It is by and far the least expensive ledger software that I've been able to come across. Now, if you want to go really inexpensive with Claude, there's something called Bean Count, which you can actually track. You can run through Claude paired with a couple add-ons. You can run your own ledger software essentially where you can upload your bank statements and it will help you categorize it into an Excel sheet. That would be a topic for another video, but that wouldn't cost you really anything other than if you have a paid Claude subscription. But even Claude, if you have one of the paid subscriptions, is probably going to cost more than QuickBooks Ledger would cost through an accountant. So I think the key there is if all you need is the ledger software, QuickBooks Ledger is a phenomenal option. It's just finding an accountant that is willing to do that for you. QuickBooks Ledger doesn't come with receipt uploading. It doesn't come with billing. So if you do any invoicing through QuickBooks, you wouldn't be able to do that. If your invoicing is handled outside of QuickBooks and you keep your receipts stored in like a folder on your computer, then it doesn't really matter. But I'm just trying to highlight some of the limitations of QuickBooks Ledger. But again, it is an excellent solution for those that are just looking for a basic, reliable ledger software at a really low price. I strongly recommend it. Like I said, I have a handful of clients that all they do is reimburse me for the ledger subscription every month, and they handle everything beyond that. If you can find an accountant or know an accountant friend of yours that can do that for you, great. If not, there are options to it yourself through Claude using something like Bean Count as an add-on or as a tool. So just consider that there are options depending on your budget, depending on where you want to take these things. If you're just starting out as an entrepreneur, QuickBooks Ledger exists. Don't let anybody tell you different. It is $10 a month before taxes, and it is, in my opinion, a great solution for those small business owners. Now let's talk about sales tax. Because this trips up more business owners than anything else, TaxJar has a starter plan around $39 a month and a professional plan around $99 a month. I generally tend to think that the starter plan is good enough for most of the small businesses out there. Both include a set number of auto file credits, meaning TaxJar will actually prepare and submit your return for you in certain states. Anrok starts around $100 a month and leans toward businesses selling software or digital products since it's built around like software as a service tax rules specifically. Numeral is another one. Numeral works differently. Instead of a flat monthly fee, it charges per filing, roughly $75 per state return, which can actually work out cheaper if you file in like a handful of states. Avalara, they're the biggest name in this space, but is priced custom, meaning you have to get on a call and find out like what it costs. And it tends to be built for like larger, more complex operations. So if you're a really small business, there's a good chance that like Avalara, as good as they are, might be like overkill or really expensive. I'd say TaxJar, their starter plan, is a great way to at least get you started. Now, as I like to mention, there's always like a DIY option. So you can file the sales tax reports on the state websites or the applicable like local jurisdiction or municipalities websites. That is a lot more doable in my opinion. The sales tax reporting, that is much more doable than the payroll tax reporting for a DIY standpoint. So if you're going to take on one from a DIY perspective, take on the sales tax. But like I said, there are solutions out there that will handle the sales tax for you. They can just get fairly expensive. So depending on what stage you are in your entrepreneurial journey, like it may or may not make sense to pay a sales tax filing provider. But again, the DIY option is manageable. You got to get yourself on a schedule. And I would recommend making like multiple calendar reminders like, hey, you have your sales tax report coming up for this state. Don't forget to file. And so that would be my recommendation in terms of sales tax reporting. The last thing is, here's essentially the part that nobody talks about. None of the software companies cover everything. So take Washington State, for example, its excise tax returns can actually be like auto-filed through platforms like TaxJar Avalara. And so that one's covered, but plenty of local jurisdictions are not covered. Colorado has more than 70 home rule cities. And while about 40 of them let you file through the state's centralized portal, a chunk of them still require you to register and file directly with that city with no software involved at all. Most cities and counties file through the state's combined system, which is helpful, but some self-administer their tax either directly or through a third-party administrator, and those need a completely separate filing. And then there's a category almost nobody expects, which is municipal businesses and occupation tax, B&O taxes. In West Virginia, Martinsburg, West Virginia, that's one example of many. They're currently requiring a B&O taxes. If any business is done within those city limits, you're required to file a B&O report. And right now, as of July of 2026, they don't have an online option. So you have to go really old school and print and fill out a paper form for Martinsburg, West Virginia B&O tax. And you have to write a check and then put that in an envelope, put a stamp on the envelope, and mail it to the tax department in Martinsburg. And there are jurisdictions like that across the United States, but it's one of those things where I call them and they tell me they're working on an online option, but right now it's one of those where it's just paper, it's paper filing. So as much as I've gotten used to doing everything online and handling everything from a PDF document, there are a handful of jurisdictions, municipalities that still require you to paper file. And so just be aware of those local requirements, because if you haven't been filing with those localities that don't have an online simplified filing option, you'll probably get a letter in the mail that says, hey, you owe us some money and maybe we're going to charge you a fine. So just be aware of those pitfalls and try to minimize those. One thing that I would recommend is go on to Claude or ChatGPT or Google even and just search what state you're in, explain what you do from a business standpoint, and see all the different local requirements or tax filing requirements that you should be aware of, because that will be a great kind of initial peek into what your requirements are, and it will help you kind of heat check on what you're doing and see whether or not you're missing anything. Because I'll tell you right now that if you catch it, if you notice something that you may have been missing before the state agencies do, it's going to be much easier, faster, and simpler to resolve than if they get a hold of you first. So if you receive a letter in the mail, an angry letter, and they tell you you're missing a report, it's not as easy to resolve and it's not as easy to work out maybe a waiver of penalty if you weren't the one to catch it first. So just be aware of it. Go ahead and do a quick search on any of your preferred data research tools and just say, hey, I live in Oregon and I want to make sure that I'm paying all the taxes and filing all the reports I need to. What are all the different state and local reports based on where I live in Oregon and where I do business? And that will give you an excellent answer and some insight onto what reports you should be filing and make sure you're staying in compliance. Because like I said, it's much easier to catch any mistakes before the mean letter goes out than after. But either way, usually states understand that especially new businesses won't always be aware of all these requirements. So a lot of times, like if you receive one of these mean letters in the mail, you can call up the state organization, and if you get on the phone with the right person, a lot of times they will offer some flexibility or some penalty relief regarding those missed filings. And so just keep that in mind. Communication is key. Make sure you're always letting people know that you are not trying to avoid these reports. You were just unaware of these reports and you want to make sure they're going to be filed correctly going forward. I've found that there's usually quite a bit of leniency within the different state governing authorities to allowing you at least a one-time pass or one-time waiver on any penalties that are accumulated. Just work with the state. Make it very clear that you're not trying to defraud anybody or you're not trying to avoid filing these reports. You were just simply unaware of these reports. Once you're aware of these reports, throw them on your calendar, get them on a schedule. Make sure that if you're responsible for filing them manually, let's say you decide to do your sales tax reports the DIY route, make sure you have that on a schedule and you're filing those when you need to file those. Now, if you're working in like multiple states or cities, it's not a bad idea to consult like any sort of research tool you use, whether you use like ChatGPT or Claude. And now they do make mistakes sometimes. So I like to pit them against each other. I'll ask Claude one thing and I'll ask ChatGPT another thing, and then I'll Google the same thing to make sure my answers are in alignment with one another. But when it comes to the filing across multiple states, they all use a very similar like user interface. And so that makes it a little more doable because all the different states have slightly different rules. And if the user interface looks similar, at least that pain is mitigated. But I would make sure that you are plugging in and researching all the different requirements for the different states, different municipalities. So just across the board, you want to make sure that you're covering the different tax requirements and filing requirements for each individual state that you're doing business in. All right, so now you have a little bit of insight on Xero versus QuickBooks, the options for payroll taxes, the options for sales taxes, and I have a brief overview of some of the software that I've had experience with and my personal recommendations or opinions on those pieces of software. So again, I personally am using QuickBooks Ledger for a handful of clients, which is that $10 a month solution that not a lot of people know about. And then I'm using QuickBooks Payroll Core software for the payroll processing. And then I am doing a lot of DIY sales tax reports filing. I'm not currently paying Avalara. I am simply going to the state website and filing the state sales tax reports. And then I'm going to any municipalities that require me to paper file or file online. And I'm doing that. I'm not working with enough businesses for that to be terribly overwhelming. But in the circumstance, let's say I bring on 50 different businesses, that would be substantial. And then at that point, I would use something like TaxJar or Avalara. But at this point, there's not too much to handle it all manually. So at this point, I'm doing it manually, and you certainly can too. Just make sure you have it on a schedule. All right. And that covers the topics for the day. So I will leave you with this. God bless you and your family all the time.